So over the last 100 years, we are going through the same situation that we're going through right now has happened 2 times over the last 100 years. You can see it happened back here in the 40s and it also happened back here in the 70s. And what we can see is every time we get this same problem we're going through right now, we end up getting a second spike, and the second spike is much bigger than the first spike. Here it is here. That's the first spike. The second spike is much bigger than the first spike. So that tells me we're about to get ready for a secondary spike. I'm going to talk to you about what exactly this is, the dangers, the warning, but also how we can flip it on its head to actually generate and actually potentially generate really generational wealth behind this second coming spike. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here. So the chart that you saw on the intro of this video is this chart right here we're looking at right now. This is the inflationary rate for the United States of America, right? Be so technical, John. United States of America. Anyway, so this is the last 100 years. And what I want to talk to you is I want to talk to you about through the last 100 years, when we've had inflationary problems, what is likely to happen moving forward, so we can keep a close eye on of what's likely to happen. One, so we're not surprised by it, so we can prepare for it, and then also secondly, what are the investments we can make that's potentially likely to do really, really well. So this video here, guys, is more of a bigger picture. This is more like what's likely to happen for the rest of this decade. You know what I mean? From now through to say 2030. That's what this video is all about. It's not short-term technical analysis, looking at the moving averages and looking at the chart patterns and all that sort of stuff. Okay, that's completely different. Okay, this is looking at the big picture, what's likely to happen over the next say 5 or so years. So by looking at this inflationary rate, this inflationary number here, we can see that we had problems in the 40s and also in the 70s, and we're coming through right now. So what we're likely to get if history does repeat itself, okay, so if history does repeat itself, we are likely to get what? We are likely to get the secondary spike, as I talked about in the intro. This is the first spike, and then we get this spike through, right? So this is number 2 here, number 2 here. So we're likely to get number 2 here, and number 2 spike is always bigger than the first spike. So that tells me that there's a good probability we're going to get what? Another secondary spike. Now, what's going to cause the spike? An inflationary spike is inflationary because probably one thing, and that is printing money, right? We just, if you put the dots together, we know, if you look through history, right? If you watch Mike Maloney's Hidden Secrets of Money, if you read Ray Dalio's stuff, The Changing World Order, and you see through history, they're not going to stop printing money. So in the next recession, which is probably going to happen next year, we know we're going to go through a recession next year. The markets are probably going to start to come down. Okay, from for the next few months, we may get a spike in the stock market. We may not, but we're probably going to come down we're probably going to have a bearish year next year in the stock market from there, right? And that may even come down with a lot of other things as well too. That may happen with gold and the mining sector as well too, right? That's the short term there. But then they're probably going to print a lot of money because there's going to be some really bad things happening in the economy, right? Because they're not going to print money for no reason, right? The economy is not going to be really good and so they print money, right? There's going to be a lot of, for them to print money, for this secondary spike to happen, they're going to have to print a lot of money. If they're going to have to print, if for that spike to happen, they're going to print a lot of money. Why would they print a lot of money? Because things are not doing really well, right? And so therefore things are not good. So therefore they're going to print a lot of money to cause the spike. Why are they going to print a lot of money? Because things are not really good, right? So if you start to put the pieces together, like, oh, that actually makes sense, yeah. So in history, we've got a secondary spike. We're probably going to get a secondary spike again. What's going to cause a secondary spike? A lot of printing money. Now, why would they print why would they do a lot of printing of money? They're going to do a lot of printing of money because the economy is going to be turning the whole doo-doo, right? Turning the whole shit, basically. And then they're going to need to come back in and do the rescue. And if you look through the history, every single time they've actually printed money, it's actually gotten bigger and bigger and bigger and bigger. And again, if you read Ray Dalio stuff and the Hidden Secrets of Money and so on and so forth with Mike Maloney, you'll see that the history gives us 100% certain that they're going to keep printing money and keep printing the currency into oblivion. It's just like it happened. The purpose of me telling you this, guys, is this is the big picture. This is what's likely. We can see what's likely to happen over the next, say, a couple of years when it comes to the recession and then the boom and then the next inflationary spike. And this inflationary spike, I believe, is going to put us into, say, This inflationary spike may not happen because they may print money, say, at the end of next year, maybe 2025. The inflationary spike may not happen to 2027, 28, 29. Makes sense? So remember, this is not what's likely to happen next week on the stock market from a trading perspective. So the reason why I bring that up is because I think it's really important to also understand what's coming, right? So when we start to go through inflationary problems again, you're ready for it, right? You're ready for it because when they start to print a lot of money, what's going to happen to the stock market? What's going to happen to asset prices? What's going to happen to commodity prices? What's going to happen to gold, right? We're going to go through another reflation. So if we can be prepared for what's likely to come as the next couple of years unfolds, we can say, right, now things are happening, things are turning to shit, they're printing a lot of money, what's coming for the next 12 months? And by you seeing what's coming moving forward, you can anticipate, and when the cause starts to line up, the effect is going to happen, right? Cause effect relationships. As if you read Ray Dalio stuff, that's the whole cause effect, right? Whatever the cause is, and then the effect relationships. 2020, guess what? The cause was printing a lot of money, causes inflation, things go boom, right? So when the cause happens again, print a lot of money, what's going to happen? The same effect. So we can see the whole pieces of the puzzle coming together, and you can generate some serious amount of money from seeing this coming. As I said before, guys, I don't believe that the inflationary secondary spike, I don't believe is going to really get underway until probably 27, 28, maybe even 29, obviously towards the end of this decade, right? Because that's obviously looking at the big picture there. So some of the real big markets that have done really well in the past have been gold and silver, right? So if I squeeze my gold chart up through here, this is gold through here. You can see here that, let me go back to here. Right, you can see here that last time this was the 70s spike. This is the whole 70s period through here. We had the first spike through the middle of the 70s, and then we had the move through there, and then towards the end of the 70s, we got that through there, which goes inside of what? The secondary spike. So that tells me that the secondary spike that's coming could actually send gold to do this again and gold to do that again. That's where potentially $5,000 or a $10,000 gold is not that unlikely to happen, right? Not that unlikely. It has a good chance of happening, right? That's all I say. But again, what I just said there is going to take time, right? For some people in the chat box, if gold goes down tomorrow or this week or this month, that's not what this is all about. This is all about what's likely to start to unfold, in 2027, 2028, 2029. Now, the purpose of me saying that is that you never know how that's going to unfold. We could start, all this here, this big boom here, that takes time, right? This takes many years to unfold, right? So when I'm saying 28, 29 or 27, 28, 29, you don't wait for that time, then you buy it, right? Because we could be down here, we could be here, we could be here, moving into the secondary spike. So that's where like gold for me is likely to be one of those asset prices that I believe is going to do really well. I also believe the mining sector as well too, right? So the GDXJ, let's actually have a look at the junior miner stocks. I do believe the junior miner stocks, or the gold stocks itself, are going to do the mining sector is going to do really, really well and in that period of time as well too. Now, traders, please do not, if you watch my videos consistently, do not get confused with what I did on my yesterday's video, which is mining sector looks weak right now. That's short-term technical analysis, reading what the chart's telling you right now. What I'm saying to you right now, what I'm saying to you in this video is what's likely to unfold for the rest of this decade, right? We can go through a 20% drop right now, and 26 we'll go through an incredible boom, right? That's 2 years away. So do not get those things are completely mixed up there. They're completely different things. We can go through an incredible boom in 2026 and 2027 because of the printing of money, and we have a bearish we can have a bearish 3-6 months, right? They're different. And this is where I think a lot of traders get the analysis and the approach wrong, because they look at the big fundamental about what I'm saying. Oh, gold's likely to go through a big boom. Mining sector's going to go through a boom. So they buy right now on the back of what I just said, and then it goes down for 3 months, and then they're starting to get freaked out. Oh my goodness, I thought it was going to go through an incredible boom. Oh my goodness. It's like the context is wrong, right? Your timeline is wrong. If you buy based off what I just said there, you must understand that it's probably going to take a couple of years for that thing to really unfold, for that thing to start to really go through a big boom in the markets. So we're likely to see that through there. And even when we start looking at, let's say, silver prices, right? We look at silver prices through here. And if we have a look at the last, actually, let's do this here, right? This is the 70s right here. Actually, let's bring up this up here. Right? This spike through here is what? This is the 70s spike, just like gold did. So that tells me that, well, I honestly believe that the sector that's likely to have an incredible boom is going to be the gold sector and the commodity prices, mining sector, that sort of stuff. The reason why, guys, is because I think everything goes in cycles, right? We have stock market boom. Yeah, stock market boom. We have cryptocurrency boom. Yeah, cryptocurrency boom. When was the last time we actually had a gold boom, right? Where everyone's like, oh my goodness, should be in gold. When was the last time we heard that about mining sector? It's been a long time, hasn't it? So therefore, simple cycle analysis tells you that probably the next thing for people to start to, jump over the seats and do backflips over for the next market. What I mean by jump over the seats and do backflips over, it's like that's when that's when the cab driver's telling you to buy gold mining stocks. You know what I mean? Stuff like that. And even commodity prices. I remember when the crypto boom was happening, and my ex-wife came to me and said, "Oh, I'm thinking about buying Bitcoin. What do you think?" I'm like, "Oh, we're near the top. We're near the top." I said, "We're near the top." My ex-wife, who has no idea about the markets at all, and she's like, I'm thinking about buying some Bitcoin. What do you think? I'm like, just stay out of it. Don't get involved. And I'm so happy that she listened to me, or hopefully she listened to me, because if she did, then she'd be hurting right now. But anyway, so that's what I'm seeing through their traders, and I see this thing happening right now when it comes to the inflationary spike. So I honestly do believe that as this starts to as this folds over the next 1 to 2 years, and what I mean by unfold, meaning the recession hits. When the recession hits, it's going to hit hard. It's going to cause a lot of printing of money. A lot of printing of money is going to cause a massive reflation, and I believe the reflation is going to reflate everything: stock market, gold, commodity prices. But I believe the major beneficiary is the asset price that no one's focusing on right now, and that's gold and the mining sector. So gold, to me, the big ones is gold, silver, and the mining sector, especially gold mining stocks, especially gold junior miner stocks. Well, I believe that whole sector there from 2025, 26, and I say, like, we just don't know, right? We just don't know. As I said before, like, we're looking at, this is a weekly chart. When I say 2025, remember this here right here is in the middle. This is like 1977. This here is 1980, right? That's many years of unfolding through there. I believe we're likely to see this again. Generational wealth will be created. Can you imagine buying options? Way. As soon as they start to print money and you start to see things start to heat up, right? As soon as they start to do that, and then you start to see the silver price start to really pick up. Can you imagine like putting on like a position on, say, options, and you buy as much time as possible, but you buy way out of the money for like 1 cent, and then 1-2 years later we end up getting a massive spike, and that 1 cent option is now worth $5. and you've put on 10 or 20 grand on that position, or even 5 grand. Like, do you see what I'm saying there, traders? Like, and I'm not telling you what to do here, because again, you don't do that now, right? Because we haven't actually had the recession yet. We haven't gone through really, really, really bad things yet. We're not printing money yet, right? Because when we do print money, it's going to take a couple of years for that thing to start to really unfold. So, I'm not saying do that now, because if you do that now, you're probably going to lose a lot of money, because we still have probably a good couple of years of not having inflation, going through the recession, then printing money, and then say if they started printing money at the end of next year, maybe 2025, they're doing printing money. Then I'd say 26 and 27 is going to be this. 26 1 year later is going to be when the inflation starts to spike, and that's when things like it happen. Make sense? So I'm not saying it's going to happen right now. No, we'll probably have a couple of years. But what I'm doing here is I'm giving you a big picture about what's likely to come, so we can have a really good view of the next, say, for the rest of this decade, of okay, we're probably going to go through a recession. Yes, check. They're probably going to print a lot of money because it's going to get really, really bad. Check. It's going to cause a secondary inflationary spike. So when it does come, I'm not freaking out because of inflationary problems again. Even worse this time. Check, because it's probably going to happen again. And when that happens, then I'm expecting stock prices and asset prices to go up again because of inflation. Check. And I'm also then expecting that if that's the case, then I'm expecting the major beneficiary factor out of that time is probably going to be gold and gold mining sector. Do you see what I'm saying there, right? So come 10 years from now, you're looking back and you've studied like I'm teaching you right now, right? And I'm showing you the roadmap ahead so you can anticipate. So even with the position of, say, a 5 or 10 grand position, done correctly and at the right time, using options or whatever, could literally generate you a lot of money, right? Now, obviously, when you start to put on a lot more money from there, you can really start to generate some big money from there. And obviously, that's what I do with my private clients, guys. If you like this sort of stuff, you should actually join my private coaching program, which is I'm doing this sort of stuff, and I'm doing my actual trading every single day. And you can join me if you want. All you have to do is, guys, click on that second link in the description there. When you click on that, go fill out the application form. If you really like this sort of stuff, but you would like to see not only this sort of stuff every day, but then actually see the positions I'm doing every day, then again, second link in the description there, guys. Go click on that, and you can go fill out the application form, and you can actually then and then also book a call, and we can see if you're a good fit. So go do that right now, guys. Remember, this whole thing here, traders, is to get you ready, because there's going to be people, the rich get richer and the poor get poorer. Because what are the poor doing right now? Right now, for me, it is a Sunday morning, and I've been studying, I've been researching, and I've been getting ready, and I'm doing my planning. The rich get richer. Why? Because one, they see the path ahead by looking back. Secondly, they can start to put a clear map in front of their mind about what's likely to happen based off the cause and effect relationship. And all that simply means is that when they do things, aka we go through recession. Okay, step number 1, recession. Step number 2, they're going to print money. Maybe, and that printing money might take 6 months, might take 12 months to happen. When they print money, okay, cool. Now they're printing a lot of money. I'm expecting a reflation of asset prices. That may kick in straight away. That may take 6 to 12 months for that thing to really happen. The cause is, okay, print a lot of money. The effect is reflation of asset prices. When you start to really put this thing together and you start to put the pieces together, you can really anticipate. So as this is slowly unfolding underneath with our eyes, you know what's happening. And so the rich get richer because they see what's coming, and then when it happens, they can anticipate it. And when it happens, you can take advantage of it because you know what's likely to happen. And that's how the rich get richer. And if you want to be part of the rich get richer, then it's important for us to anticipate what's coming by looking back over the last 100 years and then having a good probability. And when that probability starts to become reality, as in like the cause, recession, printing money, inflationary spike, all that sort of stuff, you're like, oh, I was expecting this. So you're not caught off guard. You're anticipating it, and then you can take advantage of it.